Good day, welcome back to my channel. Today we are going to look at the topic we have on the screen, bank reconciliation statement. Bank reconciliation statement. Please, if this is your first time of coming across this channel, please endeavor to subscribe and share. If you have any question, please drop it on the comment below. I will always attend to you. So we want to look at the meaning of bank reconciliation statement and how to prepare it. In this our modern time, business organization usually open current accounts with the bank, and bank will issue them with passbook and checkbook, with which they will pay money into the bank and also withdraw money from the bank. And so all their transactions, the transaction that will be result between the bank and the business firm will record it in their passbook, or cash book. Either they prepare this one or they use cash book in such a way that when they pay money into their bank account, the business firm will debit their cash book, while the corresponding entity is supposed to go to the credit side of the bank statement. So, as the business firm will prepare cash book to record the business or the transaction between it and the bank, so also the bank on their own will prepare bank statements to record the transaction between it and the business firm. And so the effect is that at every point in time, the balance of the bank statement and that of the cash book of the business firm is supposed to have equal balance or equal value. But due to some reasons, in some dates, the balance will not agree. Due to some reasons which we are going to talk about here. Therefore, bank reconciliation statement is a statement prepared by a business firm to reconcile the differences between the cash book balance and that of the bank statement. So now let's look at some factors that can actually cause that difference. The factor that will lead to a difference between the bank statement and the cash book balance. One of these causes of difference is what is called unpresented check. Unpresented check is a check that the business firm has drawn in favor of their customer, but the customer in question have not taken the check to the bank for payment. Therefore, the business firm has already credited their bank account, showing that money has gone out of the account, and which the correspondent entry is supposed to go to the bank, to the credit side of the bank statement, showing that money has also gone out. But unfortunately, the creditor has refused or has not taken the check to the bank. So the effect is that the balance of the bank of the cash book will be lesser than the balance of the bank statement. And so to correct it, the value for the unpresented check is going to be added back to the cash book in order to reconcile the differences. So another factor is uncredited check. This is the check that is received by the business firm from their credit customer or from their debtor, and they have already paid it into the bank. But maybe due to lateness, the bank has not credited the money into their bank account before the preparation of bank statement. And so the effect is that when the business firm, when they receive the check, they have already debited the account, showing that the money has entered into the account and paying into the bank, so that the bank on their own will credit their bank statement. Of course, you know that debit for cash book means that money has entered, but for bank credit means that money has entered. So as the business firm will credit the cash book, the bank on their own supposed to credit the bank statement. But in this case, the business firm debited their cash book while the bank statement balance still remains the same. So the effect now is that the balance of the bank cash book will be higher than the balance of that of the bank statement. So now to correct it now, it has to be what? This balance has to be deducted from the cash balance, so that the balance of the cash book and that of the bank statement will have an equal balance. Another factor that can lead to the difference is what is called uncredited, credit transfer. A credit transfer is a situation whereby a business firm, a customer of a business firm, pays money directly into their bank account without notifying the firm. And so the effect now is that the balance of the bank statement will be higher than the balance of that of the bank of that of the cash book. So, and to correct such differences, that the credit transfer, the value or the amount has to be what? Also to be added to that of the bank, to that of the cash book. That is for credit transfer. Then for another cause of, there are a lot of differences. There are a lot of factors that can lead, that can cause the bank statement and that of the cash book not to balance. Another factor we can also look at is talk about dividend. This one occurs where a situation whereby a business firm has another investment or invested in another company, and they are entitled to the share of that profit of that very company. So they are entitled to dividend. And so when at the maturity date of the investment, the company they invested in will pay their dividend directly into their bank account. And so the business firm will not know that the money has entered. And so the bank statement or the bank will credit the account of the customer without notifying the customer. And so the effect now is that the balance of the bank statement will be higher than the balance of the cash book. And so to correct such discrepancies, the credit transfer has to be what? Added back to the value of the cash balance. It has to be added back to the cash balance. Another one is you have bank charges. And commission. Bank charges and commission. These are charges that the bank usually charge for their customers for services rendered. And so the bank will debit the account of their customers without notifying them until they will receive the bank statement. And so the effect is that the balance of the cash book will be higher than the balance of the bank statement. And so for you to correct this cause of difference, the bank charges and the commission has to be deducted from the cash balance. That is for this. Another one is what is called standing order. Standing order is a situation whereby a customer of a bank will instruct his bank officer to be making an instrumental payment on his behalf from his bank account. Example of such transaction is when you talk about hire purchase installments. So in this case, the bank will debit the account of the very customer in question without notifying the customer until the customer will ask for the bank statement. And so the effect is that the balance of the bank will be lesser than the balance of the cash book. So for you to correct it, the amount for the standing order has to be also to be deducted. The bank have already deducted it in their bank statement by debiting it. So the cash book, the business firm also have to deduct it from their cash book by crediting it. So this is for this. Another cause of difference is what is called dishonor check. Dishonor check. This is a check received also by a business firm and paid into the bank, but due to some irregularities, incorrect amount, inconsistent in the signature and other factors, the bank will refuse to credit or to honor the check. Therefore, the effect is that the business have already debited their cash book. And so because they have already debited their cash book and paid the check into the bank, and the bank returns the check. So the entry now will be that the cash book will now deduct it by crediting the cash book, so that the balance of the bank statement and the balance of the cash book will have an equal balance. Another factor is error. Error by the bank or error by the cash book. A bank can make a mistake. Maybe somebody they're supposed to be credited will be debited, and somebody they're supposed to be debited will be credited. Such error will also affect the agreement of the banks. And cash book on their own can also make what? Mistake by either overstating or understating the receipt side of the cash book. These are some of the errors that can lead to disagreement between the cash book and the bank statement. Of course, there are so many other factors that can lead to such discrepancies. But the nature of the error will determine how you are to treat it. But these are the basic ones that mostly lead to the causes of differences. So now let's look at the format for the presentation of bank reconciliation statements. There are three scenarios used in preparation of bank reconciliation statements. One is when the causes of difference are given. Number two is when you have to prepare an adjusted cash book, and then use the balance of the adjusted cash book to prepare the bank reconciliation statement. Another one is when the cash book and the bank statement abstract are given. So you have to compare the bank statement and then the cash book and then reconcile the both. But in this video, we are going to focus on the first scenario, a case whereby the causes of difference are given. But before we look into that, let's look at the format for preparing bank reconciliation statement. Format. If you want to start, there are two ways to start. Bank reconciliation statement as at which date. The date you are making the reconciliation. There are two ways to start. If you are starting as at the balance as per cash book, after doing the reconciliation, you should be able to get the balance given to you in the equation as balance as per bank statement. But if we start with balance as per bank statement, we are going to arrive at balance as per cash book to show that you have actually reconciled the causes of difference. So if you are starting as balance as per bank as per cash book, the implication is that you are going to add the unpresented check. You are going to add the credit transfer, the dividend, and the undercashing of the receipt side of the cash book. I will show you the reason why you have to add that to the bank balance as per the cash book. And then you have to less the uncredited check. You will also less the bank charges, the commission, the standing order, the dishonor check, and the overcashing of the receipt side of the cash book. And I will show you why. Let's start first. So, first of all, you start with balance as per cash book. Then add unpresented check. You add unpresented check. Then you add your credit transfer. You add dividend. You add dividend. And you have added unpresented check, credit transfer, dividend. You also need to add undercasting. Receive side of the cash book, and then when you total it, bring it here, and then total it. After which you will less the following. Uncredited check. You will less bank charges, bank commission, you less bank charges, bank commission, you will less standing order, you will also less dishonor check, you will less overcasting of the receipt side of the cash book. Overcasting of the receipt cash book. And lastly, in some transactions, we also need to less debit transfer. When you total it, let's see from this. Whatever figure you arrive at here becomes your balance as per bank statement. This is the typical format of how to prepare bank reconciliation statement when the causes of difference are given. And remember, if you are starting, I told you that if you are starting at balance as per cash book, you add the above, unpresented check, credit transfer, dividend, on the cash flow receipt side of cash book, and then you let this one. The reason why you have to add back all these things is that, remember that unpresented check is the check you draw in favor of your customer, which you have already credited your cash book. But when you receive the bank statement, you discover that it has yet to be deducted from the bank statement. So you need to add it back. Credit transfer, a customer of yours or your debtor pays directly into your bank account without your notice. So as you receive the bank statement, you need to add it also to your bank, to your cash balance. That's why you're adding it. The same thing with dividend. It was paid directly into your bank statement without your notice. So when you receive the bank statement, you need to add it also to your cash balance to increase it. Then on the cash flow receipt side of the cash book, maybe the bookkeeper made a mistake. The balance was supposed to be 500, but he put 400. So the difference now, you need to calculate the difference and add it back. But as for the following now, uncredited check. For the uncredited check, you have drawn it in favor of your customer, but discover that the bank, you have received it and paid it into the bank. You initially debited it, but because the bank have yet to credit your account, you need to deduct it to avoid overstating your balance. But for bank charges and bank commissions, bank charge you this money, and then you yourself was not aware that such transaction has occurred. So upon the receipt of the bank statement, you need to deduct it because it's an expense to you. You also need to deduct it. Same thing with bank with the standing order and the dishonored check. So now let's take a work example to further buttress it and to enhance our understanding. Assuming that we have the following transaction. Assuming we have the following transaction, and we have to follow this format to reconcile the causes of differences between the bank statement and the cash book. For instance, the question says, on 31st January 2024, Mr. Paul cash book showed a debit balance of 2,100 naira. His bank statement showed 2,370. So now, you have to make the decision which one to start with. Whether to start with balance as per cash book or balance as per bank statement. But let's start with balance as per cash book. So following this, we say bank reconciliation statement as at 31st January 2024. We start with balance as per cash book. Put your naira sign. The balance as per cash book is 210 naira. 2,100. 2,100. So now, the question says on comparison, the following way found. First one, check drawn amounting to 1,600 had not been presented for payment. This is unpresented check. You can see unpresented check. So we now say add unpresented check. And how much is that? 1,600. Next transaction, a standing order of 700 naira to a club was not taken into consideration. A standing order, you can see where standing order first, so it has to be deleted. So wait, you have to asterisk this one first. Third one says bank charges of 150 were entered in the bank statement only. You can see where the bank charges falls under. So we have to asterisk, jump it first. Then the fourth transaction said a dividend of 400 was paid directly into the bank and not recorded in the cash book. This is dividend, and dividend falls under here. So we write, say dividend. How much is that? 400 naira. Then the next transaction said check for 1,100 were entered into the cash book and paid into the bank but had not been cleared, and this is not credited. This is uncredited. This is uncredited check, and we have not gotten to that place. So we are studying it. Then the last transaction said a customer, Mr. Azik, paid 2,200. 220 naira directly into the bank without notifying the business firm. This is the credit transfer. So credit transfer is here. So we say credit. How much is that? 220. And so when we add, to use calculator, when we add, we are going to get 160 plus 400 plus 220. You will get 420. And when you add, if you add 1,600 plus 400 plus 220, we have 2,220. When we add it plus 2,100, we have 320. Then now we less. We less uncredited check. And from the question here, uncredited check is number 5. It said check paid for 1,100 will enter into the cash book and pay into the bank but had not been cleared. So this is unpresented check, uncredited check, and the amount is 1,100. And another transaction is the number 2, standing order. You can see where the standing order falls under. So, and the figure is 700. The next transaction is bank charges. Bank charges is 150. The figure is 150. And so this is all the transactions. We have already treated all of them. So now, let's add it. 1,100 plus 700 plus 150. We have 1950. When we let this from this, minus 4,320, we have 2,370. This will now be balance as per bank statement. Ladies and gentlemen, we started at balance as per cash book 2,100, and then after reconciling the cost of differences up to this place, we arrived at balance as per bank statement as 2,370 naira. If you go back to the question, you discover that the balance as per bank statement was 2,370, showing that what we did is correct, that we have corrected the causes of what? Cause of the differences. Assuming that if I decided to start at balance as per bank statement, if I did everything correctly, I should have arrived at balance as per cash book. If we should try it, what you need to do is to start with balance as per bank statement, and then you add the following. If add 1,100 plus 700 plus 150 with this balance, and then less 1,600, 400 and 220, which equals to 2,220 from it, you are going to get back 2,100. So when you start at balance at per cash book, you should be able to arrive at balance at bank statement. But if you start at balance as per bank statement, you should also be able to arrive at balance as per cash book. Ladies and gentlemen, this is how to record or solve any bank reconciliation statement question. You can use this format and try any other example relating to this topic. In part 2 of this video, I'm going to look at a case where you have to prepare bank reconciliation statement using adjusted cash book. Please, until we meet again in another video, please bye for now and endeavor to click the subscribe button. God bless you. Thanks for watching.